Okay, welcome all our Pennystock billionaires. Sunday night, December 5th, we are coming into the final weeks of 2021. And now is the time to be preparing for 2022. I think there's going to be some tremendous opportunities coming up in the next couple of months. Huge opportunities. And a lot of it, I believe, is going to be really kind of coming into stocks that have gotten really slammed, or some depressed stocks, things like that. So let's start off with kind of the big picture. Here's what's going on in the markets. The overall financial markets, equity markets, speculative markets, whether it's Bitcoin, NASDAQ, are looking pretty rough right now. So before we get into that, I just want to run a quick disclaimer, which is at the bottom of the screen. Everything here should be considered, actually, none of this is investment advice. This is purely for entertainment purposes. Companies we discuss, the microcaps we discuss, are clients of Octagon Media Corp. So yeah, that you take everything with a grain of salt. All disclaimers are below in the video, in the links in the video description. And with that said, let me just pull this up over here. Okay, so make sure you join our Telegram channel, you join our Discord, all the good stuff. Okay, so here's what's going on. The markets look like, it looks pretty bad right now. NASDAQ. I'll go to Tesla. I'll go to Bitcoin. Everything else, but right now things. You're looking at, you're breaking below the 50-day moving average here. Look, there is definitely some levels of support coming up in NASDAQ, say in the 14,000, but there's a lot of it is there is some room for things to drop. So things could definitely get kind of nasty in the next couple of weeks, and that's going to spill over into the speculative space. The good news here is the good news. The good news: a lot of our stocks are actually, in pretty decent shape. I don't see any big drawdowns coming up. Most of them are actually, a lot of the stocks have got hit last February, March, the micro caps, and they've been starting to come back. Look, we've had Visby became a 10x, etc. That's pulled back, but we have a bunch of others that still have really in that kind of they've been building. I would say it's kind of a base. So I think what's going to happen is you could have some of the big cap speculative stocks really take a big hit in the coming month. Micro caps, a lot of these things are already relatively low, but this is a time you definitely want to be on the defense. Like anything that went up crazy price, anything with massive multiples, you want to kind of be out of those type of stocks. You want to be in stocks that are still relatively undervalued, that have some momentum going on. So let's see. So the Nasdaq, we could see a pretty healthy drop coming up here. I don't think it's going to be the end of the world, but kind of the next stop is around 14,200. Maybe 13, but where can things settle out? I would say, look, the thing moved 10,000 points, right? 10,000 points from the bottom of March of 2020. 10,000. Let's say you take off 33%, so that would get you to 13,000. That's the first stop. That would basically be a 33% retracement of the big move, right? So I think that's a pretty good starting point. If things get really nasty, you might see a 50 or 60% retracement. So that would take us around to 11,000 over here. So I think 11,000 on NASDAQ is a pretty good base. You got so between 13 and 11,000 is where I think things could kind of settle out. All right, so let's take a look at some of our bellwethers. Oh, that was Tesla Q. That was not a that was an accident. Tesla. I don't think this is going bankrupt. Okay. Okay. Here's the Tesla chart now. Wow, this is going back. Let's kind of recap. Let's recap the long journey of Tesla. Again, I'm not a Tesla fan. I don't purely. Again, it's purely a bellwether. And I think I first started talking about it right over here last year. It's 13 months ago, literally 13 months ago. One of the first few of our live streaming chart shows. And at that time, I said, "Hey, this thing could be going to 1,000 by April." I was wrong. It only went to about, well, it hit a high of 900 a few months later, and it went to 1250 by October, November. So it took about 6 months longer. I was off. Now, right around here, I said, hey, things are going parabolic. We had this big breakout. So this was the big breakout, 900. That was the big breakout. And I said, hey, this thing breaks out, I can go to 2,000. Now, one thing I gotta tell you guys, like, when I say like, these crazy numbers, whatever it is, a lot of times that's kind of where that's the potential. That's really the potential. You got to discount it a little bit because it doesn't mean it's going to go. I mean, we've seen a lot of cases. I will take full credit. I've been right about, let's say, peak fintech. I said this thing would go to $14, possibly $20, and I think it topped out at 14. Now, same thing here with Tesla. I think the Tesla story right now, I don't think it's going to go to 2,000. I think we've lost a lot of energy over here, a lot of the momentum. You do have a little bit of support coming up, but I think this thing is going to break this moving average, this 50-day moving average, which has been a very good indicator, good trading indicator for this stock. So if it breaks this 970, you want to be short Tesla, or you want to be out of Tesla. Where could it drop? I mean, geez. I mean, this thing, the bottom of this thing could be like, could be pretty brutal. It could be pretty brutal. I mean, you're talking about $1,000. It could, yeah. I mean, things could drop off to like 400. I mean, you got some support coming up at 400, at this kind of 580 range. Your first level of support is going to be here, 870, in the 870 range. People are going to be buying the dip, but I think we, I think we may have seen, and we'll know this week. We're going to know next couple of days. We might have seen kind of the top of the market, the overall market, and things are going to take a bit of a hit. It's interesting. I kind of was talking about this last year, literally last time this year, last November, December. If you go back to the old live streams, I thought we would see a top in December. In around February, and of course, things actually just went crazy. So it was off. It did actually, for microcaps, there was a top, but the overall markets just kept going higher. And I think maybe this is it. Look, I mean, sometimes I'm off by 6 months. You know what? That's the way it kind of works. Sometimes the timing is a little bit off. So here is the good news. Let me just tell you, there's always a flip side to everything. There's going to be some massive opportunities, and this I talked about this last year. There's going to be some massive opportunities coming up with, again, stocks either get very overvalued or they get very undervalued. I think there's going to be some opportunities coming up in the next couple of months to get into stocks really, really cheap. So you want to keep some powder dry. You want to keep some dry powder. Anything that's overvalued, you should definitely be out of. I don't know, some stocks, it might be, I don't want to say it's too late, but there's definitely some overvalued stocks out there. Those are going to be taking a hit. Let's go back into ARK, the Cathie Wood Disruptive Innovation. Now, you know what? I mean, if you look at the Pennystock Billionaire Gang performance versus Cathie Wood, I think we've done a lot better. We've had so many 10 baggers, 50 baggers, 20 baggers. I think a lot better than Cathie. Now, here is the ARK ETF, and this thing looks pretty nasty. You can see here, you can kind of see what's going on. It's pretty interesting. They peaked February 12th. So right about 2 weeks before a lot of the micro caps peaked. And this whole year, even with Tesla, a lot of these guys making new highs, this thing, this thing has been under pressure. It's been, look, it's breaking the moving average here, which is a sell signal. And it keeps making lower highs. Look at this. Every high is lower. So it's been just bleeding, and it's making lower lows in this thing here. Now, it broke this neckline last Thursday and Friday. And this is a key area of support right here. The next level of support is, it's really coming up. But I think ARK broke the key support level. So where is the bottom for ARK? Probably, let's see, 34, 120, 60. So I think it's going to overshoot. This is going to overshoot. It might break this kind of, it might go into the 30s. Definitely. This is going lower. And this thing has been really, really on the defense over here. So, yeah, this thing is definitely, it looks very, very weak. So let's take a look at Bitcoin. What is going on with Bitcoin? Again, I'm not a Bitcoin believer, but I think it's a great, really this thing trades purely based on sentiment, right? There's nothing really underlying it. So it's just pure speculation for the sake of speculation. We're kind of seeing here, is this a double top? I think it could be. This is, again, a nasty looking chart. This is the daily chart. We're below the 50-day moving average, and the 50-day moving average on Bitcoin has been very, very accurate. I've talked about it before. Anytime the thing breaks above the 50-day, you want to be long. Look at this. It broke above the 50-day over here. It was 10,000 roughly. It went to 60,000. It broke below, so it dropped 10,000 points. I guess it was a bit of a fake out, and you had a bit of a fake out over here. But then again, it broke below 57 and dropped to 30. Broke above. You can kind of see this thing is very, very accurate. I know there's guys who sell these Bitcoin trading advice things or whatever it is, but all you need is 50-day moving average to make money with Bitcoin. And again, I don't care about Bitcoin. I think it's a massive scam ultimately, as most of the cryptos are. But sometimes look, there's a lot of very smart guys who are trading it because there's a lot of hedge fund guys who are trading it because they just see, hey, it's a trading vehicle. Even if it's complete fugazi, it's just a trading vehicle. But there's a lot. Look, I think there's here's the thing. I really believe that there's people are saying, okay, what is going to take the markets down? What is the black swan, right? They were saying, okay, it could be the China, the over leveraging, the real estate crash in China, all that stuff. I think really the black swan is cryptocurrencies. There's definitely a lot of leverage, especially outside of the U.S. There's a lot of people who've gotten into the cryptos. Especially a lot of millennials, Gen Z, what have you. Shit, there's a lot of old people. There's 80-year-old guys who are trading this thing. But it's mostly, I think it's heavily in the kind of the millennial thing, because everybody thinks, oh, this is it. This is the future. Look, they conflate blockchain technology with Bitcoin, decentralization with Bitcoin. I'm a fan of decentralization. I'm a fan of blockchain. Those are technologies. It's kind of like saying, okay, in the year 2000, back in the dot-com boom, the internet is the future. Yeah, of course, the internet is the future. There's no question. But does that mean that, pets.com or, whatever, all those crappy stocks, does that mean that they were no, a lot of those things dropped 90% or 99%. So Bitcoin, I think, is a systemic risk for the markets. And if Bitcoin drops here, I mean, it's gonna have a knock-on effect on a lot of things. Ultimately, I think it'll be good if this thing just completely wipes out, because I think when Bitcoin, completely evaporates, it'll be very good for the penny stocks, because there's a lot of penny stock guys who they've moved into the cryptos, and we want them back in the penny stock world. So when I think when Bitcoin drops to 8,000, 10,000, it'll actually be bullish for penny stocks. There's definitely be some short-term pain. Okay, so what's going on with Bitcoin? So Bitcoin is, I don't know if this thing, we've had some times where you had these kind of fake outs, it breaks below the moving average, then it finds support. I don't see it happening here. I really don't. I think we've had a dead cat bounce. And again, you had this kind of dead cat bounce. It could break this. Again, this is the 1 hour chart. I think from here, this pattern here, this is very weak. This is not a base. It's really not a base. It's like a dead cat bounce. We could see maybe a little bit of a pop. I would say this is not a place where you want to own Bitcoin. I would not be buying Bitcoin over here. So that's the overview. I'm giving you kind of the big picture here. And the big picture, the overall macro picture, the macro is pretty ugly right now. The headwinds, is going to be some pretty big headwinds coming into the micro cap space. On top of that, you got tax law selling, which has been really hitting stocks. So it's been pretty bad. Okay, so let's take a look into some stocks which I think can actually make some money here. Now, let's go through the charts and see if there's any opportunities coming up this week. Liquid Avatar. This is a company that is in the metaverse space. Okay, so some of the short-term catalysts are, they got the whole metaverse thing happening, the whole NFT. They were at the LA Comic-Con this weekend. I think it's closing right now today in LA. Today's the last day. The show's going on all weekend. I sent some Twitter things out showing you their booth. Looks pretty impressive. So I think this thing is gonna get some eyeballs on it. And the crazy thing is, these guys have been really a metaverse company from day one, when we first introduced it last December at 13 cents. From 13 it ran to 50. A lot of people didn't know what the CEO was talking about, David Lukacs. I think now they're kind of going to figure it out. But anyway, I've been saying for a while here that it's going to be breaking out of this pennant. You got a pennant formation, and this thing could be breaking out, going to 50 cents. So what is going on? So last Wednesday, it looked like it was going to break out. It was Thursday, Friday, made a new high, went a little bit higher. Again, and this was a very bad market day on Friday. Last week was pretty bad. This thing has held on. I think if the market was a little more supportive, this thing would be 50 cents overnight. But right now, again, it's above the moving average. So it's really, if you look at this 1 hour chart, it is definitely breaking out of that pennant. So it would be very interesting to see what the market reaction is going to be Monday, which is tomorrow, and this week. So it's going to be very, very interesting. Okay, and by the way, David Lukacs, that's Liquid Avatar CEO, he's going to be on Tuesday tuning in to the live stream and get the latest update. I'm very curious to know what the reaction was from the Comic-Con show. Yeah, these guys are doing some crazy, crazy things. I mean, they're actually, this is like the right space at the right time. They're doing, what is it? They got the NFTs, that's this metaverse virtual land, all this crazy stuff. Like, I actually don't get it. I don't understand. This NFT thing is like, I don't get it. But look, people are into it. It's a crazy thing. And look, you gotta go with the flow right now. That's where the money is going. So I think this could be an opportunity for this thing to go to 50 cents. Keep an eye on that stock. Okay, let's go through the rest of our stocks. Organic Garage. Let's go to the one-day chart. Okay, so Organic Garage basically doubled from 30 cents where we introduced it, like, I don't know, last month basically, or when the company really announced that they were doing a program, and then so basically it was 30 cents. So it went to 70 cents. So it was a little bit over a double. And it's had a pullback. So from 30 to 70, it's 40 cents. So you got your typical, 50% retracement, which is, 20 cents. So it takes us to 50 cents, actually go to 60%. This is like a typical Canadian retracement here. So what is going on? Now, Thursday, this thing looked ultra bullish, like it was breaking out. And again, I think ultimately Organic Garage easily could be a 250 short term, $5 by October, November next year. So about 250, I think it could be trading at 250 very, very fast. Like in the next, before I said it would be 30 days. I think with the market right now, the headwinds, it might take a little bit longer. I think we're going to be in a couple of months. I think that over the next few months, you're not going to see, okay, so what we saw last year where stocks would go up, we had these 10 baggers, we had like 3 10 baggers that became 10 baggers in 4 months, maybe 4. I think we had Fans went up 10x in like 4 months, ESC went up 15x, CBDT went up 50x. What else? We had a bunch of others that went crazy in that period. I think going forward for the next 12 months, you're not going to have these massive moves in 4 months. It's going to be more normalized. So a 10 bagger is going to take, I think 10 months, a year maybe. You'll definitely have doubles and triples very quickly, but the big moves, they're going to happen a little more slowly. We're going to have a more normalized market. And I think there's going to be a couple of opportunities in a few months where there's some stocks I'm looking at right now that I think are going to get hit. And there's going to be, opportunities when they're going to be on sale in a few months. And that's kind of when you make the money, is when things are deeply undervalued. Okay, so Organic Garage, again, Thursday, it looked like it was going to break out to really ready for new highs. Again, Friday, again, with a sloppy market action, with the headwinds, it really got pushed back. Although we had a decent close, we had a pretty nice close. I mean, it kind of bounced back, but it really should have, the thing should have, all else being equal, if the market was, if the NASDAQ, everything else was relatively neutral or even slightly up, the stock would have soared. But yeah, it was okay. So where is this thing going to go this week? My bias is to the upside. I mean, we're going to know really tomorrow how the overall markets are doing, because I mean, if NASDAQ drops 1,000 points, something like that, that's going to be weighing on a lot of things. It's going to be like a wet blanket thrown on top of this, fire here. So it might dampen things a little bit. The stock looks in very good shape. I mean, all else being equal, I mean, it looks bullish. I mean, it's above the moving average, very strong breakout. The MACD line is looking good. Yeah, I mean, things about to cross over. So I'm inclined. I'm inclined to say that this thing is looking good. Again, if you look at the fundamentals, and I did a whole video on fundamentals, all that stuff. Watch the video that we have on the channel. I kind of lay out the case why Organic Garage can be a $5 stock. By the way, if you want to join our Discord channel or Telegram channel, click the links in the video description below to join our Discord. I think you get a thing on TikTok, on Twitter, Discord, Twitter, Telegram. Telegram is the good one. You definitely want to be on our Telegram channel, and it's free. And you get a lot of great information on that channel. And of course, wallstreetreporter.com. Join our email list. Let's see. Let me see if we get any. Okay. 6 cents. Is that 60 or 6? I guess it's 6 cents Canadian. 6 cents Canadian? Or 6, I don't know. I guess it's got to be 6 because there's never 60. That is like the bottom. So that's the bottom of that stock. So I think this guy's going to do very well. Okay, let's take a look at Relic. Relic is doing very well in this very sloppy market right now. On Friday, one of the few stocks that was in the green. So, and again, this thing is a very interesting stock. The fundamentals, watch the videos where, it's explained why this thing could be 250 now, like the next 30 days, based on the fundamentals. It could be $5, maybe 6 months. So the stock, look at this. You had some pressure, and then Friday had a really very strong close. It's staying above the 50-day moving average. It keeps making higher highs. Look at this, higher highs. So it's very interesting. Again, this was a rough period over here, and it's making higher highs. So this thing definitely wants to go up. And look, this stock has so many haters. Everything in the kitchen sink has been thrown at this company, but it wants to go up. So again, I think ultimately we can see 250 on this next 30 days. That's the trajectory. $5 in about 6 months. So I don't think this is going to be a $10 stock, this year, but $5, I think, are very, very likely. Easily 250. The stock is looking good, and again, the charts would even look better if the overall markets were cooperating. Yeah, so this thing is, again, Macy D-line about to cross over. You had pretty strong buying at the close here. Yeah. So Relic is in very good shape. Let's take a look at ESE. This is a stock that should be trading at like $6 right now based on the comps. It's an esports company, for those that don't know. Watch the videos that we have with the CEO. We talk about all the details. They just closed. This was not an LOI. Actually, they closed this deal on, Wednesday, Thursday? Their run rate is going to be up to, 55, 60 million revenues in the esports space. And so in theory, the thing should be trading at, 600 million market cap, 10 times revenues, or even 5 times, 300 million market cap, which would be $3 a share right now. And, if you watch the videos, Conrad, the CEO, is saying, again, last year he said, my goal is to get to 100 million revenues run rate this year. The guy is getting there. He started with less than $1 million run rate last year when he first came in our program. Stock was, 30 cents. It went from less than $1 million to 60 million right now, roughly 60 million. We'll know very shortly. That's a 6,000%, 6DX. The stock got ahead of itself back in February, March. It went to $4. So it was a 15 bagger in 4 months. Got way ahead of itself, and now it's way behind. So these things, they go from one extreme to the other. Yes, I think this thing right now is worth $3 minimum, minimum, and realistically $6 based on comps. So let's say he gets to. I think what's going to happen is once they get to the 100 million run rate, which is probably going to happen. He's not going to do it this year. I don't think he's going to do it. He's not. Which is still it's an incredible achievement to go from a million to 60 million in a year, basically. I mean, it's much harder to go from a million to 10 million than it is to go from 60 to 120. I mean, it's very easy to double from 60. So let's see what else he comes up with. I have a feeling he'll get there by February, maybe March. So he'll be 3 months or 2 months behind schedule. But when he gets that number, that 100 million, it's going to be a massive milestone. And I think at that point, the market's going to be forced. The market is going to be forced to pay attention. I mean, right now, for some reason, I don't know what's going on. People, they don't believe it. Obviously, they don't believe it. If they believed it, it would be $6. Yeah. I don't know. I don't know how you pronounce your name. I can't. I can't read. Unfortunately, I can't read this. But maybe it could be bad words here. I wouldn't even know. It's okay. So here's the key point. This guy's making a very good point. They actually have organic revenues, growth in their organic revenues. So 100 million, very likely. The big thing, this new acquisition they made is a game changer. This is a company in the marketing space. Essentially, what they do is, what is it called? Game Addict. So it's a B2B business. They work with video game publishers. I think Roblox is one of their clients. Video game publishers, they basically get them users. They bring users in. And of course, if you can get people for video games, you can also get people for sports betting and iGaming. That's the big thing. Like the hardest, the hardest thing in that business is getting new people into, get customer acquisition. It costs, I think DraftKings or one of these guys is spending like $2,000 a user. I mean, $2,000 per new account, new customer acquisition. I mean, we had who talked Bets? Remember Bets? I think Bets is going to be trading this week. So they came out with news. Bets should be trading, I think, this week. And of course, if anybody remembers, Chris, the CEO, the former CEO, was he talked about the customer acquisition costs, big money in that. So this is the business that these guys can really get into right now. So things are looking really good for ESE. The video game. Again, what they're doing is very interesting. I think now people are going to start to realize what this is about. They supply essentially the picks and shovels for esports. So they're not doing they're not a video game developer, but they do everything else. So they basically enable esports. It's sort of like what will be a good metaphor? Okay, you have the oil business, right? So, but in order to get the oil to refineries, you need pipelines, you need tankers, and then you need companies like Halliburton who do all the engine. So basically, they're kind of like a Halliburton or whatever it is of the esports space. They basically they're the grease that makes the esports world go around. Yeah, I think the I may have made too much of this, but I do think if they change the name to something exciting, the stock would move. But I think it'll move regardless. I mean, it already went from 30 cents to 450 with the old name and $1 million in revenue. So believe me, this thing can go to $6, even the existing name. Like I just said, Bets. They came out with news last week. Stock should be trading, I think, this week. Big client with a capital B and a capital C. Okay, maybe you know something I don't know, but yeah, I think if they get like something is happening because the stock is moving up. So things are looking good. Yeah, so ESC in the infrastructure space. of esports. Bottom line is ESC is actually looking pretty good. Again, and this thing is making higher highs. It's making higher highs. The stock has an upward bias. I don't think this thing is gonna get hit with the market. Maybe it could drop a little bit, but I mean, there's a lot of support here. So yeah, I think this thing is basically going to churn up. And once it breaks, it needs to break out of this like $1.80 range. Once it breaks out of $1.80, I think we're going to go to like $4 right away. So the big resistance in this thing is kind of where it's at, this $1.80 range. $1.80, maybe even $2. $1.80 is the main number. Once it breaks above $1.80, $1.85, we got a straight shot to like $2.50, and then $4 plus. I think ultimately this thing could be $12 in about 6 months if things work out. If the market, if there's no overall market crash, no massive headwinds, this thing, could really do very well. Relay, oh shit, one of our old companies, former Superstock. Interesting, yeah, that's a good name. I don't know what they're doing. I haven't followed this in a while. I don't know who that is. That's not one of our. That was not one of our companies. Okay, so Raya, I'm also hoping to hear some news. I mean, they've been very quiet in the last month, and look, I was expecting them to have, from what I understand, they were supposed to have a lot of news, a lot of developments happening right out of the gate when we introduced them. The formula, the whole idea of our formula of next super stocks is, I've talked about this before. It's very simple. The idea is these companies that we bring them on, the premise is that they're at an inflection point, and there's going to be massive news flow, things happening, and when companies do that, when that's happened, the stocks move, right? So 90% of the time, the companies who do that, they perform, like we've had all the other companies, right? The ones that have been 10 baggers, 20 baggers, they all had that news flow, and when they kind of go quiet out of the gate, it doesn't work that way, right? So let's see what happens this week. The stock is very, very cheap here. So yeah. Speaking of which, companies that are performing with massive news flow is Organic Garage. Organic Garage has delivered on everything. Before I brought on Organic Garage, I spoke with Matt. I said, look, the key is, the only, we got to have this news flow. So if you don't have, a lot of news flow planned, it doesn't make any sense. I mean, we need companies with news flow. That's the whole premise here. Inflection point, catalyst, all that good stuff. And this guy's delivered. He's actually more than delivered. Companies had, massive positive news from day one, and it continues. They're rolling out new SKUs. They've already introduced 3 new SKUs of the plant-based food stuff. The plant-based alternatives for the $600 billion dairy market. There's going to be more coming up. So things are looking really good for the next couple of weeks. Organic Garage is doing all the right things, and the stock is performing. The volume has picked up tremendously since they started with us. Again, the stock doubled in a month, right? So the stock doubled in a month, and this has been not a great market. So the stock doubled in the first 30 days. It's pulled back, which is very normal, and now it's ready to make the move back. So this thing is behaving like a normal stock. I mean, if anybody remembers Peak FinTech, Fans Unite, CBDT, all the stocks that went up 10, 20, 50x last year, they all kind of started off like this. The first month might have been slow, then things kind of picked up, or maybe 2, and then but they had the news going on. So these guys are doing everything correct. Organic Garage, I think, is going to be our 10th 10-bagger plus very, very quickly. I mean, I think, again, 250 near-term target. It's probably going to overshoot again $5 possibly by next November, which is not a lot. $5 is only a $250 million market cap. So, and again, watch the video. I kind of lay out the case exactly 3 different ways how organic garage can go to $5 in the next 12 months. Again, this is not investment advice. These things can all go to zero, but things are looking pretty good for that one. Logic. Okay, so Logic is, ironically, Logic. This thing is, it's been a rough go of this. I think we've bottomed out here. If you look at this chart, it's just kind of like a double bottom. If you look at over a longer period, you can kind of see what's going on here. And you go even further out. There's a lot of support in this range. I think right here, the stock has been de-risked. The downside here is, I don't know, where is it going to go? $1.80, that's the all-time low, more or less. $1.90, $2. So you got like 40 cents of downside risk, I think. 40 cents, maybe it's only 10 cents. So your downside risk is, let's call it 40 cents. 40 cents is the downside. The upside, I believe, is at least $12. I think this is going to reach this number that it reached last year. And so that is, $14. So you're talking about, I don't know, $12. So here's the proposition. Would you risk 40 cents? Would you risk 40 cents to make $12? That's a 30 to 1. 30 to 1 payoff. Pretty good. Again, I think this thing has been completely de-risked over here. The fundamentals are great. They're doing what, 40 million run rate now. E-commerce, fintech, Southeast Asia. This thing's got all the right stuff happening. It needs to break out of this moving average, break above 450. It's done it before. Look, we introduced this last year at $3. It went to $14 in a couple of months. I think history is going to repeat. So Logic, it's just been frustrating. I don't know if this thing's been frustrating, but the chart speaks for itself. I just have some. I'll be very candid with you. I'm kind of stuck with this thing because I had options. I exercised. I'm kind of stuck with this. Yeah, they definitely need. I'll tell you what. Listen, here's the thing with all these companies. You should reach out to the company, reach out to the CEOs of these companies, and say, hey, you guys are on, doing live streams all the time, whether it was Wall Street Reporter or whether it was, I don't know, there's a couple of other guys doing different. Why are you now MIA? Why is there radio silence? Why are you off the radar? I'm talking about Skylight, I'm talking about Trip, CloudMD. There's a whole rogues gallery of these guys who, they're they were promoting the stock that things were going great. As soon as they raised some money, then we haven't heard from these guys, right? It's like, I don't like that. But look, I think this thing is ultimately going to turn around. They got 30 million in cash, psychedelic space. I think they're having a hard time finding some good acquisitions, quite frankly, which is what the 30 million is for. So, and I don't know what's going on, but I don't think they're spending money. I don't think they're spending, and they're very tight. I know that Todd is not spending any big money, but Jesus, yeah, Skyline is another one. Yeah, so it's I don't know. Look, I think that what my thing is this. Look, obviously, we have a business, and obviously I'm biased. I want good companies to be on our program, to to do business with us, to pay us money for different services. However, objectively speaking, if a company, if a CEO, the company goes out, starts, promoting the story, they're doing these live streams, they're doing, they're saying they're being transparent, they're doing updates, all this stuff, and that's kind of the premise why a lot of investors get involved in these companies, in these stocks, right? The transparency, the CEO access, and then all of a sudden they stop doing it. Well, you're breaking a promise. Basically, you're breaking a promise to your shareholder base. That's what the CEOs are doing. So you got to call these guys out. I mean, I know I've taken some heat. People saying, "Oh, you can't be bad mouthing your previous clients and this and that." You know what? I don't give a flying fuck. Okay. The bottom line is this. You know what? I'll always have clients because Wall Street Reporter has done incredible things for companies. We've had so many companies that we've produced billions of dollars in increases in shareholder value. Billions of dollars have been raised for these companies. The most valuable thing that we really have is a reputation in the audience, right? So the audience, the guys are watching, you guys are watching this program. The audience is the most valuable thing that we have. So I want to make sure that when companies come on our program, they're going to deliver, and if they say they're going to do something, they're going to do it. It's been probably again, it's not going to happen 100% of the time. It's going to happen probably let's call it 35% of the time. Again, we're in the public venture capital space. This is a risk. Penny stocks are risky. It's no different than being a venture capitalist on Sand Hill Road on Silicon Valley. And you're investing in all these random startup companies. It's the same exact thing here. And venture capitalists, expect that 90% of the companies that they invest in are going to go bust. And, the 10%, the 20%, those things are going to, skyrocket, and that'll, more than pay for all the losers. So if the guy starts off with, I don't know, let's call it $1 million, they invest in, 20 deals at 50 grand each. I'm just using a random example. 18 of them are going to go bust, 15 of them are going to go bust, and 3 are going to do, there'll be doubles or triples, and 2 of them are going to be 50 baggers. That's the venture capital model. Same thing here. Now, I think we have a much higher hit rate. We're probably, I hope somebody's doing the math, but our hit rate is probably 40%. I think 40% of the companies that we have brought onto the program have become 10 baggers, or at least 500%. Yeah, we've had a bunch of stocks that have been, triples and 5Xs, like Trip. Trip was up, I think, 5X. CloudMD, 5X. I might be wrong. It was maybe a 3, maybe it was only 400% or 500%. They didn't become 10 baggers, and we had a bunch of doubles, whatever it is. Skylight, I think, was a double or like a triple or something. So yeah, I mean, so basically our overall hit rate has been very, very high. I mean, again, compare, if you go through if you did a whole list of all the companies that we've brought on, their subsequent high, in other words, the price that they reached after they went on our platform, probably 90, I would say 80% of the companies that we introduce at least double in the first, let's call it 60 days. Even our RYAH, R-Y-A-H, went up like 50% out of the gate. It should have more than doubled, but whatever. Organic Garage doubled. And it's going to do, again, I believe Organic Garage is going to be one of the biggest winners of all time. I think it's going to be a $5 stock very soon. And then, yeah, we've had, we've had maybe a couple of stocks. I think we've only had 3 or 4 stocks that were complete duds, like out of the gate. They just and that was basically, they said they would have news and they never delivered this. So they were like stillborn, basically. Which companies did we have? We had, we had a bunch that we introduced in last February that were just duds. So yeah, but 90% of the stocks that we bring out at least double it right away, and then I think half have gone on to be 10 baggers, maybe 40% of 10 baggers, and maybe 70% or went like 300. I gotta put together a spreadsheet. I know somebody had a spreadsheet before, but yeah, we've had some tremendous wins. So, but yeah, so the point is this. The point is this: is that I expect that when a company, let's say they're on a program, and for whatever reason they decide, you know what, we have our own shareholder base, we don't need Wall Street Reporter or whatever it is. I'm fine with that. Look, there's companies that I don't want to. I don't. My goal when I bring a company on is I want to work with them for 6 months. That's the ideal time frame. Yeah, I really don't want to work with a company for a year. That gets boring. After a year, it gets a little dull. I mean, there's no reason why I should be doing for a year. They should take off right away. Look, right now we've got a couple of stocks that we've been with for over a year. They popped and they dropped, but I still think they're going to come back. But look, there's companies that they decide, hey, we want to try something else, and that's fine. No problem with that. But as long as they're doing some sort of promotion, like Fans Unite, right? So fans, for whatever reason, we're not working with them right now. I'm fine with that. I think this thing is going to do very well, fans. But they're still out there. They're still doing. Shareholder outreach. They're doing some other platforms that were before. They haven't gone off the radar. Fans, I think that stock is going to come. It's going to go back to $2 at some point. It's going to take a little while. Let's see, but yeah. So I don't say bad things, but I think those guys are great guys. I think they're fantastic guys. And I hope that stock does well. I'm holding a bunch of it. But a company like Skylight or Trip, when guys go off the radar, it's not cool. Okay, as the kids would say, it's not cool. So I would say, look, you know what? Don't complain to me. Call the CEOs, contact the CEOs. Either reach out to them by email, go on social media, whatever it is, but say, hey guys, you're also very out there, with investors. You're very talkative and transparent, and all of a sudden, you're MIA. What's up with that? You got to hold these guys accountable. I mean, it's just like anything else. Yeah, no, it's fine. God bless. God bless. Fans will rise when Corsair starts going up. Actually, ESE works with Corsair. I think Corsair is a sponsor of one of their tournaments or something. Yeah, so they're the esports space, sports betting has gotten hit. By the way, to your point, the idea of promotion, IR, or whatever you want to call this thing that they do, your companies, the whole idea for public companies, the job of a CEO of a public company, they have only one job. That job is to make the stock go up. That's their only job. The job is not to run a business and make widgets. That's not their job. For a private company, that's their job, is to make widgets, grow revenues. When you're a public company, your job is to maximize shareholder value, because you're working now for public shareholders, right? Your boss, when you're a CEO of a public company, your boss is the investor, the shareholder, whether a guy owns 1 share or he owns 20 million shares. But now you're working for the shareholders. What do the shareholders care about? Make my stock go up. I mean, that's the idea. Now, of course, we're not talking about pump and dump. We're talking about creating real value. And there's 2 ways of doing it. Number 1, you can do M&A. Number 2, new products, new services, organic growth. Number 3 is you could make hires of key talent, like superstar people. So it's 4 things. I said, dude, it's 4 things. All those things have risk. If you're going to do new products, you have product development risk. Half the time it's a dud. M&A, half of all M&A fails. You want to hire a superstar? Good luck. I mean, half the people turn out to be duds. Or you can do what we do, which is, you take a company which has a good story that's underfollowed, that's undervalued, and you get more investor eyeballs on it. You get massive exposure for the stock. The result of that is massive exposure results in increased awareness, increased buying. So the stock price goes up and value is created. So look at it this way. For companies like, and by the way, they also raise money. They're able to raise money at those higher multiples. So when you look at a company like, I don't know, let's say CloudMD, right? So we've probably, for that stock, we created probably a couple $100 million in shareholder value. So to create $200 million, normally you got to spend, I don't know, 50, 100 million, 60 million. I guarantee you we did not get paid 50 million, not 10 million, not 5 million, a lot less, much less. Not even a million, I don't think. Way under a million, actually. So so if you can invest, let's say you invest 100 grand in a marketing program, and the result of that 100 grand is an increase in your valuation by 10 million or 100 million. Is that a good ROI? I think it is. I mean, it's the easiest money, best ROI any CEO can make. Let's see. Okay, so let's go back to enough of the. I got a bit sidetracked over here. Anyway, I think Logic is going to do very well. Visby. Visby, again, I think this thing is going to at least hit 250. Most likely it's going to overshoot towards $4, and then we'll see what happens after that. And again, so this is a stock we introduced last year, 17 cents. So went up 1,300% so far. I think what we're seeing now is kind of like it's kind of hard to tell, actually. It's kind of hard to tell. We could see, this could be an inverse head and shoulders bottom, or we could see another drop over here. So it's very possible Visby could drop into this kind of $1.20 range. I don't think so. I think it's going to kind of make a base here. I would say it's 50-50. It could drop a little bit here. It makes a base, and then again, it's making a higher high. So this thing wants to go up. This thing is looking for any excuse to go up. Again, this is the 1 hour chart. Daily chart. Again, you see the breakout. This is the breakout that we were talking about for months. Just like PKK, the breakout from $3 that took it, or $6 to 14, post split, more than double. So here you're seeing the same thing. So you had a double here, but this move is not over it. I mean, this thing has a lot of firepower. I mean, this thing really could be a huge stock. I think easily we're going to get to $354. So you might see, okay, you got a lot of support kind of in this $1.25 range. So we got to see what happens in the next couple of days. But I think it's going to kind of build a base in this range for a couple. It might be for a couple of weeks. It might take a couple of weeks to build a base. I don't think it's going to shoot straight up. I think they got to digest some information here. I know the company's got a lot of stuff going on. Look, we're above the moving average, so I think it's got to digest, churn upwards, and in the new year, January, February, I think we're going to see that move to $3, $4. Okay. Hey, Gilbert, bonsoir. I hope you've been enjoying the Jaguar you bought with your profits from penny stocks. You know what? I actually think you're right. I mean, the Kitchen Originals thing I think could be huge. Here's the thing. The reality is, I mean, the whole business of organic garage is phenomenal. I mean, the guy, Matt, is really like the Roy Disney of retail. Roy Disney's the guy who made Disney, right? I mean, the guy was a genius of not just cartoons. Forget about the cartoon side. The whole idea of those parks, Disney World, Disneyland, whatever they call it, that whole like environment that they created, that experiential thing that is Disney. I think I was at a Disney thing one time. I got trapped into going because there was some conference at some property. Anyway, it was a complete ripoff. I mean, Disney. I remember this like 20 years ago. The hotel was outrageously expensive. This for grown-ups. It was a grown-up thing. It wasn't like kids. It was like outrageously expensive, ridiculous. And you're stuck there. I mean, you're stuck there basically. I mean, like everything is Disney. Like if you want to go to a restaurant, it's all Disney stuff. So but everything was perfect. I mean, it was just like a weird thing. I think if you have kids, I think now I think it costs like, from what I understand, it's like $1,000 for a day or $800 for a day to take like one kid, because you got to have the parents, one or two kids. I think the tickets are a couple. There's a lot of crazy, But the bottom line is, it's something which people love it. People love Disney World, or up until recently they've loved it. I don't know. The whole companies, I think they're getting into some weird, whatever political weird stuff. But Roy Disney was an absolute genius in the experiential marketing business. I think Matt of Organic Garage is like the Roy Disney of our age. He's like the Ray Kroc of our age. The Ray Kroc, the guy who made McDonald's, or I'll give you another example of another retail type of guy. The guys from Home Depot, Arthur Blank, Bernie Marcus. They scaled that business from one Home Depot store. They had a concept. They really knew exactly. Here's the thing: the whole retail business depends on really understanding your customer, knowing what they want, what motivates them, and making things really perfect and giving them good value. You got to give people value, and that's what creates success. So I think that they're going to be phenomenally successful, the Organic Garage, once they start going international, into the US, into Europe. Doesn't mean that they're going to do it themselves. They might license the brand, the name, the whole operation thing to partners, so they can get a lot of leverage with that. But of course, here's the thing: because the guy really knows what moves retail. There's a lot of these plant-based brands out there, right? People trying to start these plant-based companies. Most of these guys, they don't know anything about retail. They don't know why people buy stuff. This guy does. Matt knows, because he's got 4 stores. He does 30 million in revenue selling organic products. He knows exactly what makes people buy, what they want to buy. So when this guy launches products, it's like it's going to be phenomenal. So I know they're getting some really strong success right now with the first 3 SKUs, and this thing's just going to take off. But yeah, I mean, look, they want to talk about the plant-based because that's what investors want to hear. It's fine. I like the other businesses just as much, if not even more. I mean, again, $5, 250 million, very, very cheap value for the stock. So it's a 20 bagger. Let me pull up that chart. I'm sorry, it's not a 20 bagger. It's a 10 bagger from here. 10 bagger, $5. And listen, just like nobody believed when we brought on CBDT, nobody believed that that stock would become a 10 bagger. And it didn't become a 10, it became a 50 bagger, become a 5,000%. Nobody believed Nextech, that became a 14x. Imagine AR, Cytodyne, that became a 20x, 2,000% from 50 cents to $10. Peak FinTech, nobody believed, became a 20 bagger. I can go down the list. Organic Garage, same exact thing. These stocks, they climb a wall of worry and hate. These stocks have a lot of haters, short sellers, and they just climb over them. They trample them. They trample them on the way to $5, on the way to being at 10x. Yeah, extremely. Oh, there we go. Oh, this guy, okay. Not only is this guy a shareholder, he actually knows what this is. I've never been in one of their stores. I've seen the video, so I get it. Like I understand. Like when I saw that video of the store, like I said, this is the future. I mean, it's the future. The food prices are no par for the most. What does that mean? I don't know. On par for the most. What does it mean? It means, are they cheap or expensive? I think their thing is cheap, right? It's supposed to be discount. Yeah. So there's a big short position in OG. So here's the thing with both Organic Garage and ESC. What's been happening is, you have some hedge funds out there. The guys who basically, their excuse me, regular. Okay, so yeah, decent prices. Yeah. So their strategy is basically to, short a stock, and then the stock drops, and then they cover because they expect the company is going to be doing a financing. So they try to, grab a 30-50%, which is the way it usually works. And so there's these guys think that Organic Garage is going to be doing a financing, so they'll be able to buy the stock cheaper and cover. But it's not happening. So there's going to be a big short squeeze. These guys are going to have to cover. I don't think there's going to be any financing below $1.50. So if these guys want to, take the pain of going to $1.50 from here, I mean, I don't think they can do it. Same thing with the ESC. I don't see ESC doing any financing below like $3, even $4. So there's going to be a big squeeze. AIML, I think, is going to be back in January. They actually have some great news going on. They had some great news last month, and I think they're just kind of waiting till things develop a little bit more. They've kind of done this a couple of times. They've gone on a hiatus, come back, whatever. But it's interesting. The company keeps, developing their stories. It's actually, the stock is cheaper than it was before, and fundamentals are phenomenal now. Okay, so let me just recap. Visby, upward bias. I think it's going to do very well. Again, my target is about $4, $354 next couple of months. Let's see here. ESC, RHT, very good position, and this thing is going to roar. I think it's getting ready to go. Look at this. This thing wants to go higher. Ultimately, Relic should be 250 end of this month, next 30 days. Liquid Avatar also ready for a big breakout. I would say the strongest stocks right now in our universe is Liquid Avatar and Relic. Those are two of the most most drivers, that the most strength, the most strength for this week. The other ones are kind of going to be bullish, but could be on the defense. I mean, there's a lot of, let's see what happens with the NASDAQ and Bitcoin this week. How do we know when they will be covering? When you see the stock moving up, there's going to be a short squeeze. So I think then you'll know. So I mean, when organic garage goes to a buck, that means there's a short squeeze going on. Okay, so that said, I think we've covered everything. So thank you everybody for joining. I will see you on the next live stream.